Hello friends, myself Binali Mane, working as a lecturer in Arts, Science and Commerce College Ramanagar of Raj Shikshan Sanstha. Today we will discuss about two important accounting terms which are mostly important for any business organization. After completing this presentation, you will be able to distinguish between assets and liabilities. These two important terms, I will tell about these two important terms. So, assets. Assets means what? Assets means property of any kind owned by the businessman is called an asset. The ownership of an asset must be with the business unit. For example, computer, building, car means vehicles, cash in hand, cash at bank, account receivables are some of the examples of assets. So some definitions of assets are: an asset is anything of value that is owned by the businessman. An asset may be something which is paid for in advance, like prepaid insurance or prepaid rent. Money you will be received later, that are account receivables. The another accounting important term is liability. Liability liability means total amount payable by the business to other is known as a liability. A liability is when you owe another person or business some money. It is a debt or amount due from the business to other for the benefits received by the business unit. So liability is when you owe another person a business money. Liability typically include the word payable in the description. Basically, there are some types of liabilities, or examples of liability accounts are account payables, notes payable, federal income tax payable, social security tax payable. In accounting terms, there are two types of liabilities, that are fixed liabilities and current liabilities. Fixed liabilities are one of the major source of funds in the business is fixed liabilities. It may be in the form of secured loans like debentures, bonds, loans from banks, loans from financial institutions, etc. And the another type of liabilities are current liabilities. Current liabilities means short-term liabilities payable within a year called as a current liabilities. They constitute short-term sources of finance. Current liabilities arises in the regular current operations of the business. So, account payables. Account payables in the liability form. Account payables means if you owe another person money, it's not a really good thing. When you owe another person, you have a liability. Which asset would require you to borrow more money from bank? If we have to purchase car, then we have to borrow some money from bank, or if we have to purchase building, we have to borrow some money from bank. Since the building is a larger asset which costs more than a car, and hence you have to incur higher debts. Smaller the assets, smaller the debts. Means since the car probably costs less than the building, you would not need to borrow as much money from the banks. So account payables means if you owe another person money, it's not really a good thing. When you owe another person, you have a liability. This is a reminding point, that is liability. When we occur the liability, our account payables are increases. Thank you.